another important cue that we're tracking for our own markets today is that the CPI inflation data will be out. This is for the month of April, and it will come out after market hours as usual. So Lata is here with a quick preview. Lata, what should we expect this time around, and what is the number that our poll has thrown up?
Our poll has thrown up a number of 4.79, and this is versus a number of 5.66 for the month of March. So already in March, we had fallen below that 6% mark, but it is important that we've fallen even below 5 in the month of April. Now, the reason why we have done that is because there is a huge base. But before that, we are tracking this 5 and 6 and 4 because the RBI and the MPC's mandate is to keep the inflation target at 4 plus or minus 2%. So 4 plus 2, you could go up to 6, but ideally you should go towards 4. And we are going towards 4 for the first time in like some, 18 months or so. Not since October 21 have we gotten towards the 4% mark. Now, this is also been made possible because of a very high base. Last year, April, because of the Ukraine war in the previous month, we had a huge inflation of 7.79%, and that explains why we have this benign number of 4.79. The core CPI, which is another thing that the RBI monitors very closely, is also expected to fall towards 5.1 according to our poll. And that compares with, closer to 6.1 in previous months. So that also will be very important. Core is ex-food and fuel. And it's seen falling again because of a high base and because of cooling commodity prices. The WPI, wholesale price index, is falling. Now, a combination of this core at 5.1 and headline inflation falling even below 5 would mean that rate hike fears will be out. As it is, everyone expects that the RBI has peaked at 6.5. But when inflation falls below 5%, that feeling or that reassurance will be, reiterated. And just one word on IIP. IIP comes industrial index of industrial production comes for the previous month, March. CPI we are discussing April, whereas IIP is for March. That's expected to come in low actually at 3.8. The month before it was 5.5. In fact, the average April to February was 5.5. But this slowdown could be because of a very high base year ago, March. Also because there were unseasonal rains, and that may have dampened some activity. But somehow the industrial production expectation is not very good.
Okay, Lata, thanks a lot for taking us through all of those expectations. That is the big number which is due this evening. And of course, we will, have Lata back with us to break down all of those numbers for us as and when we do get them. For now,